It is another fun day in the crypto market. We are seeing prices go up. Meanwhile, in TradFi, green across the board. We're going to be discussing all of that and much more today on Money Never Sleeps. Thanks for joining us today, everybody. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research. Kev, good to see you, buddy. I know you've been working to the bone, trying to stack that cash to buy the eventual hopeful dip. It seems like the market is never going to go down, though. We have the Dow is leading the way in TradFi, up 325 points. The S&P continues to close at all-time highs. NASDAQ back above 20K. Meanwhile, crypto has seen a nice leg up in the last 3 days. Some excitement in that market around the upcoming U.S. election, what that means for crypto and for other risk assets. How are you doing today, my man?
I'm doing pretty good. It's very easy to just be like either feel hopeless or just FOMO in at this point, right? It's the market that just keeps on giving. And there's a lot of things that are just continuing to be extremely bearish for me. And I feel like the best thing I could do right now, because obviously these markets are irrational. We got a big event coming up in the next few weeks. I'm talking about the election, obviously. But I feel like sitting on my hands, stacking cash, trying not to do too much. I feel like I'm very happy with the plays that I have. If anything were to happen, and just kind of keep your ear to the ground. I think that's the most important thing that I'm doing right now, right? You're following the narratives, you're seeing what's going on in the, not necessarily in the market, but more so what's going on in the monetary system itself, and seeing, okay, what happens once we get past this major, event, this election? How do the markets react to the monetary system itself? So there's stuff that I want to talk about today regarding the BTFP, the reverse repo, and the DXY, along with a bunch of other stuff going from Asia to Bitcoin's recent price action, which, funny enough, that was the target that we had maybe about 3 weeks ago. We said that at 68,000 BTC probably would have got tapped. It did, but there's a lot of things that come along with that as well. So I'm just kind of here looking at the big picture, not getting caught up in these massive moves that we're seeing in the markets that just keep going green only.
Let's talk about kind of the bigger picture before we get into crypto. When we last talked on Wednesday, it was before the latest round of CPI data came out. That came in above expectation. The markets didn't really respond, too severely in either direction. We saw core CPI come in at 3.3%, higher than the 3.2% expected. Does that become a trend? Does that impact the Fed's decision? Right now, the market is saying no, because the CME futures are showing a 94% chance of a 25 basis point cut on November 7th, which is 2 days after the election. So that first full week in November is going to be fucking crazy. Batten down the hatches, like between the election, the Fed meeting, it's going to be a very volatile and fun time in the markets. We may have to do, we'll see what our schedules look like, but see if we can get on to talk about what is going on at that point. And then, this week we have some retail sales data tomorrow, some other, data points that I don't think are that important right now. Like it's jobs, it's inflation for what the Fed is going to do, but more than anything, it is the election coming up here in just under 3 weeks. I just want it to be over. I'm so tired of like hearing about it and all the commercials and blah, blah, blah. Like, let's just get on with this shit. It's too much. I'm tired.
It sure would suck if we didn't know who the president was after November 5th, wouldn't it? I feel like that'd be like the worst case scenario where it's just like,
we'll again. We're not going to find out that night. Like, no way.
Yeah, that's the unfortunate thing too. Remember back in the old days when we used to find out that day? It's like, oh well, it looks like I don't even know. I wasn't even alive for any of those. I guess George Bush won in 2004, or Barack Obama easily wins in 2008. 2016 and 2024, man. You're surprise after surprise. It seems like it's going to be, but yeah, that's the main event in the markets in itself. And we talked about inflation a little bit right there. Let's talk about Asia real quick because that is something that's definitely going to impact inflation here in the United States as well. They've introduced a ton of monetary stimulus, right? And if we've been watching the Asian markets, they've been doing something kind of weird. They've been seeing a lot of profit taking, not necessarily to the lengths that are extreme, but there was a lot of money that was injected, but it's on the monetary side, not necessarily the fiscal, so that there's not actual consumers spending into the economy. They're just everyone's pretty much strapped for cash, right? So there is a case where we could see inflation be this momentary bubble. Maybe this is the next CPI reading, but it doesn't necessarily equate to how consumers are pretty much performing in the economy itself. I think we're going to see a lot of like fears that, oh, inflation is going to get out of hand again. I think it's more the case that there's going to be no real demand out there, and that there's a good chance that we could see a lot of those inflation numbers peel back really quick, especially if we start getting some of those revisions for those job numbers, which I don't think many people have much faith in. Especially after November 5th, I don't think a lot of people are going to be too surprised when they see some of those revisions. But that week of November 5th all the way till November 10th, there's a lot of things that are just lining up for absolute chaos in terms of programs that are ending, liquidity that is drying up in the system. And, Asia is kind of hinting that that is the case right now. And we're going to take a look at something regarding the BTFP that shows you that, well, if Asia is seeing this problem now, then we're seeing the DXY rise itself. Then what are we going to see once these two institutions are drained completely? It's kind of pointing at where we're heading right now, but we're not talking about it. We're not hearing about it, not until after November 5th.
Not until after November 5th. All right, let's go ahead and kind of look at the markets themselves. No, sorry, just forgot to put on Do Not Disturb, and I got a little call there. Okay, so we're seeing green as far as the Dow, the Nasdaq, and the S&P go, but when we peel back a little bit, there's some tech that's getting beat up, and we see once again NVIDIA kind of raising all boats right now. NVIDIA up almost 4% on the day, still very close to all-time highs. This was after we had news that the Biden administration may put in place, some restrictions on where they can sell their chips to. We saw, your fun little designs there, this wedge thing. Just talk to me about that, and overall, like where you're at with NVIDIA.
Yeah, so obviously I'm way past the video. Fuck this thing. That's just my opinion, not financial advice. But we have to think about a few things here. We broke out from this, right? And we're finding resistance just shy of the all-time high. You bounced off of it right here at about 139, got rejected, came down pretty drastically, and then it's being bought up once again. However, when we look down here, it's so hard to kind of see on this. We're seeing that the buying volume is dropping significantly, and the only type of real volume that we're seeing is selling pressure. The red volume spikes that we're getting, someone big is selling NVIDIA. It's that distribution model. I saw that Drunken Miller today was saying that he regrets selling all his entire NVIDIA position. I think he's going to eat those words. He shouldn't be too upset considering that he took pretty good profit at a decent level for NVIDIA. But looking at this here, there's still no necessary confirmation that this move is going to continue onward, say election or post-election to new all-time highs, right? I still think that the failure to break this all-time high here just tells you that right now what we're looking at is a bit of a double top. Could it change? Yeah, absolutely. This thing is literally doing everything outside of its possibility to keep pushing up and not down. A lot of this is still tied in heavily with the yen carry trade. We're seeing the yen get stronger here. It might have been a bit of the reason why we saw the sell off yesterday. But if I'm looking at NVIDIA and I'm thinking, what's the next move? I would say that you're probably going to see either a quick pump up to get people to buy in, and you're going to get that all-time high. And then I think that would kind of mark the end of this move to the upside. But I also think that right now, there's still a chance that this is a failed bullish breakout. And by me saying that, that means that this would be 100% a bull trap. And if we look at this on, say, like something like the weekly, I mean, that just turned red on the weekly right there. But this is kind of a crappy pattern to see. This is telling me that there is a lot of indecision up here. People don't necessarily want to buy, they don't want to sell. You're seeing this really weak candle up here. It's almost like a doji star. Tells me that on the weekly, there's a good chance that we could see reversal or we're seeing a bit of a top within this range. I'm not convinced 100% yet, but if you also look at the volumes on the weekly, decreasing as the price pushing up, that's bearish divergence. And what we are going to talk about right now, before we get into anything else, is going to kind of hint at what we're seeing and why that could be a bad thing for NVIDIA and a lot of other indexes and stocks in the market. So what we want to do right now is we're going to talk about the banks, and then we'll get back into TradFi just because I keep putting it off. I think this is really important. Quietly, without us knowing yesterday, the reverse repo dropped 5.02%, dropped $14.37 billion. Actually, you know what? I lied. It dropped way more than that. It looks like it dropped 59 billion yesterday, and it's 18% down. Oh, that's weekly. My bad. See the daily. It dropped a bit yesterday. Let's see. Yeah, yesterday was 45.337 billion. Today it dropped 14.37 billion. So we went from, in a matter of 2 days, being at 331 billion all the way down to being at 272 billion. Why is this important? Well, this tells you that there's a lot of liquidity being drained from the system, right? We were talking about this. We were talking about the DXY going up in value and being stronger. The other reason why this is important is, we're at a point where this could eventually just drain as we head closer and closer to the election. These are big moves that we're seeing. It's a 5% drop today. Yesterday was roughly, this line chart sucks. Yeah, there you go. It was a 13% drop yesterday. Today it's a 5% drop. Like we're kind of adding up more and more drops in this reverse repo. But the other one that's really interesting too is a chart that we used to talk about all the time. We haven't recently, and that's the bank term funding program. In the bank term funding program right now, we're looking at this chart. It's a perfect picture. It's symmetry right here, right? It's supposed to repeat what it did on the other side, and we're starting to see a lot of people start to sell off, to repay this, and that means that we're seeing a lot of liquidity being drained from the system as well. If I'm looking at this was March 8th of 2023 to where we currently are. That's March 29th. That's 3 weeks. The election's not too far off from 3 weeks, right? That means that this thing should be at zero within 3 weeks. That'd be right around November 5th, November 10th, in that range. So imagine the reverse repo's gone. We're also going to see the bank term funding program completely at zero. And what we're seeing right now with the DXY is really scary. It's going up. It's going up with equities. So why would this be going up with equities if the reverse repo and the bank term funding program are being drained? Well, it's because there's a liquidity shortage in the system. There's a lot of people that are demanding cash right now and are just trying to get a hold of it. That's why we're seeing the DXY just being absolutely parabolic. But where is this money going? It's going into a lot of these equities, a lot of these stocks, NVIDIA, and a lot of other tech ones that have pretty much been holding up this market. Why? Because of margin. If we start to see a lot of margin calls happen, a lot of people lose a lot more money than whatever they're borrowing right now. So they're trying to get out of their positions and they're using the dollar. And that's why you're seeing so much demand for the dollar and it's pushing up like crazy. And you're seeing all these institutions drain like crazy. The Fed is kind of pulling away the liquidity here so that some of these people can't necessarily access this liquidity come, say, November 24th, November 25th, December. There's just not going to be that availability to access those funds for people who are in need. When was the last time that we saw this? February 2020. So I'm just saying that's a really bad sign that we're seeing in Asia. It's kind of right there here in the US. It's all lining up towards a liquidity crisis, something that we've talked about in the past. Even before we wrapped up the show last week, Warren Buffett sold underneath his 10% stock, so he doesn't necessarily have to disclose how much he sells within 3 days. Now it's 3 months, and he could offload all of his Bank of America positions. There's a lot of pain in the banking system. I think a lot of people are trying to get out of banks and any of those. We're seeing some of the price fluctuate going up today in some of the banks. Think about where they're getting that money from. It's the reverse repo. It's the bank term funding program. The banks are the ones that are able to access those funds. They're the ones that are probably going to be pumping their stocks, buying back some of their stocks, and also some of those heavily margined and extremely overweight stocks that are keeping this entire equity market up. They're trying to keep as much cash in the system as they possibly can. That's kind of your three clues that's what's going on right now.
Some of the other things we normally look at, as far as direction we're going, oil on the way back down. This is its fourth, fifth day in a row of red as, tensions have cooled a little bit in the Middle East. I say that now, I probably just jinxed it. But if you look at gold, that is also kind of the canary in the coal mine right there. Gold looking at a potential all-time high close on the daily, right around 2673. It got up as high as 2685. So we're seeing some movement over in the precious metals market. We can talk about that real quick. We can talk about treasuries, and then I want to get to Bitcoin because I think Bitcoin is at a very crucial level right here. And however it closes on the daily today, I think is going to have a big impact on its direction moving forward.
I couldn't agree more. Gold right here obviously is just kicking ass. I have this on the weekly because the daily is such a hard chart to look at because it's just green all the way straight up. At least here on the weekly, we could see that this historical trend line that we had, that was supposed to hold at about 2350, blew right past it. Now, why is this important? Because it's probably a lot of nations who are buying gold. I think China was one of the biggest ones. Excuse me. They were buying gold nonstop, and now we're starting to see a lot of people. It's the uncertain trade. I've always said this. Gold is something you get into and you're not sure what the market's going to do. It's not necessarily the best performing asset when the market does crash because people do sell off gold for cash. Because why? People need cash to pay off their remaining debts. If you look back in 1929, the people who made the most money were those who had the most cash on hand because then they loaned it out to people, and at a certain percentage rate, they were able to get it paid back. They're the ones who did extremely well. So what I'm seeing here is people who are loading up on gold might be a bit late to the party. Peter Schiff, I'm sorry to say that. But the reason I'm saying that right now is because of what we're seeing in the treasury market itself. Let me pull this up. That's why I was happy you brought up this, and then we'll talk about oil real quick and then go to Bitcoin. But if we look at the treasuries on the weekly, let's see, that's not what I wanted. I want the daily. So this is the 3 month. So obviously there's a bit of a sell off there. People are buying it there, but where do we want this? Here it is. This is what I want. We're starting to see this bit, and this is the 5 year. We're seeing it in the 2 year. We're seeing it in the 1 year, and we're seeing it even in the 10 year and the 20. We're seeing these pumps that have happened, and see, it's not necessarily too crazy what we're seeing here, but what we're seeing is when this goes up, people are selling debt. That means that they're offloading their treasuries. They don't want anything to do with it. They're selling whatever they have for cash. And that also plays into this idea that there is a liquidity problem in the system. You're going to start seeing the same thing with gold as well. There's a lot of uncertainty out there. You're starting to see people who are starting to panicking. They thought that the Fed cutting rates would kind of show that the treasury market is deciding which way the market should be going. Now you're getting a bit of panic out there. And people are like, well, the equity market keeps going up, and I still have these trades out there, and I need cash on hand because I need to pay off all these debts. I need to cover my position. We're going to start to see the treasury yields rise once again. Doesn't mean that they're going to rise forever. It means that it's going to rise probably until people need cash or something breaks in the system. And then you're going to see a lot of people flock to treasuries because that's kind of what happens, right? The government needs treasuries to be pretty much bought up so that the government can run properly. And the reason why we're seeing it right now is because these other nations are in need of cash. Who do I think is selling these treasuries? It's Japan and China. That's what we're seeing, this huge spike that we saw. We were heading pretty much down to, we were heading a lot higher to reverting from zero. We were going positive. And then we saw this drastic push to the downside here in the 10 to 2 year. That's all Asia needing cash. That's all their stimulus that they started pumping into the system, into the monetary system, not fiscal, like I keep saying. But that is kind of what we're seeing. People need cash, and that's why it's really dangerous when I'm looking at the equity market. Why isn't the dollar making equities weaker? It's because people are using the dollar to pump the equities to make sure that that money stays, those positions and those stocks stay liquid enough, long enough for them to get out. And you kept on saying, where was it? I looked for my oil chart, and then we go right into, here it is. Oil's getting its ass kicked, right? I still think that there was a move to the upside that was coming if we were to see something happen in the Middle East. Maybe it does happen. I don't necessarily know. I did see something today saying that Israel is planning to attack prior to the election, which means that I wouldn't be surprised if retaliation or anything like that around that time as well. That could cause a lot of oil fluctuation. Um, but I think that after the election, with everything that we're talking about today, there's a good chance that oil could just fall off a cliff because demand is not there. People are not spending money because they're starting to lose their job. You're not going to see the demand for oil. You're not going to see the demand for oil for manufacturing. It's going to be a very crucial time right around that November 5th, 10th, when we start to see some of that liquidity kind of get crunched, see if the real demand is out there in the economy. But I think this is a global problem, not necessarily just a domestic or even a foreign one. This is everyone that relies on oil is going to be impacted by that. And also, as we're talking, the DXY is actually just hitting the highs for the past like month or so. So it seems like the problem is only getting worse by the second. Let's talk about Bitcoin, and then I'll let you carry that one away because you brought up a really interesting point last night to me in house.
Yeah, so we're seeing Bitcoin dominance just under is like trying to get to 59% now. Highest level it's been at since I believe April 2021 is what I looked at. So we see a lot of people, some analysts on Twitter talking about that and its importance. And I think we're at this crucial level where Bitcoin dominance, it looks like it wants to go to 60. And I was like, just kind of looking at the chart for Bitcoin yesterday and, seeing if I could like deduce anything from it. And if we go to the straight Bitcoin chart, it really looks like we're at this crucial level. A trend line starting back when it hit all-time highs in March of this year. And we're at this point where like if it needs to close above 68. That's what I see is, we had this trend line from, if you zoom out a little bit more, where is it on my screen?
I'm looking at the
March.
daily.
Yeah, I have it on the daily. So back to like March 14th, earlier this year. And we have just this trend line where we've just been rejected off of over and over and over again. And, kind of keeping Bitcoin in this parallel channel where it looks to me like if we don't break above 68, we could see it back down, following the trend down to like 51. So that to me was interesting, and it wants to get there. Like it's been this, back and forth these last few days of, a wick up to 68. It was above 68 for a few, 15 minutes earlier today, came back down. Can it finally break through and hold that resistance? I don't know. And like, it doesn't really matter to me in the near term because I'm not buying here and I'm not selling here. So I'm just kind of, an interested observer. But if you're like super leveraged right now in Bitcoin, I don't know if leverage trading Bitcoin is a very smart idea. And B, you may want to rethink things because if it looks like if it closes above 68, then it's going to blast off to new all-time highs. But if it continues to struggle there, it looks like we're going to come back down into the low 50s to me.
Yeah, I think that's a perfect explanation. I completely agree. I think when I looked at this at 68 and I said that it was probably going to go to like 67, 68 level, we were looking at the same trend line. I thought it would get rejected off of this. And for the most part, it is right now. You can see that we're overbought on the stochastic RSI, right? Maybe it could stay up here for a day or so. But, part of me with the information that I have about what's going on in the monetary system, and if I was a gambler, I would short the shit out of this. However, I do not trust a single institution, a single platform, a single equity right now because when people get desperate, we start seeing that reaction in the markets itself. And that scares the living shit out of me. To be playing with leverage right now with an asset like Bitcoin, which is heavily dominated now in the financial sector, right?
I was going to say, especially when you have, the big players out there involved. Like you got Larry Fink talking up crypto every day. I mean, you are going to get squashed by those guys if you try to play their game. So like sometimes the best way to win the game is to just not play it at all.
Yeah, let the market come to you at this point, right? If you feel like it's too high, then just be patient and have that cash on hand for when it does eventually come down at a level you think is worth buying in. And don't FOMO too. I think FOMO is a really, really scary thing right now because it's been so high for so long. It's like, oh, it's never coming down. I've been waiting for it to come down forever. Sometimes you got to wait a while, to get in a level where you really want. Sometimes when you chase the market, that's exactly what they want you to do. And the big institutions being in there, if we are really truly in a liquidity crisis, who's to say they don't just dump on us? right? If they know,
Oh, you just froze on me there. I think we lost Kevin.
just lost my internet. Sorry.
All good. You're back.
This shit could dump in the Asian markets, and there is no one that's going to stop Bitcoin from dumping. Imagine how it is, and it opens up the next day, right? You're probably going to want to keep an eye on a lot of institutions and see what they do with the ETFs. A lot of people, what they're doing with the ETFs, might give you a hint at what's going to happen, but you know, this is a very scary place for Bitcoin. I think it's going back to 51,000, but it could break out before then and just get kind of a fake bullish breakout. And then next thing you know, you're back at 51,000 or below that. So the key thing for me, though, has been that alts have not been strong, right? Alts have not performed anywhere near Bitcoin has in the past few weeks. Maybe BNB. Ever since CZ got out of jail, it's still doing okay, I guess.
BNB
But
Ponzi.
BNB Ponzi.
Did I lose you again? Kevin's internet is going to absolute shit.
Yeah, internet just keeps. I'm just going to stop sharing my screen. Alts suck. They're not doing as good as Bitcoin for the time being. I'm not saying that they actually suck, but it's just they're not performing as well as you would hope if you were hoping for an alt season. So I'll just leave it at that. My internet's like trying to tell me don't inform anybody.
It's Larry Fink trying to shut you down. All right, we'll leave it at that for the day. I think that's a good place to stop. Congrats if you've been making a lot of money in the meme coin streets. Those have gone absolutely crazy. The only thing that the old man yelling at clouds here will say, if you're taking screenshots of your wallet to send to your friends, take some fucking profit while you're at it, okay? Like, don't round trip that shit. But thank you for joining us today, everybody. If you haven't yet, hit that like button, subscribe to the channel, drop a comment in there. We'll be back on Friday to talk about the latest. We will not be back on Friday.
Wednesday
of next week.
Yeah,
Kevin,
I'm sorry, guys.
Kevin's work
I hate my job.
disaster. But we'll be back next Wednesday. And then hopefully for that exciting first week of November, we won't have any interruptions. We'll be able to get to our regular schedule then.
I'll be here for that.
All right. Awesome. Everybody have a great rest of your day. Great week. Appreciate you joining us, and we'll see you next time.
Take care, everyone.